This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. Now we're having a very, very special friend. He used to be a neighbor right next door over there. It's one of the smartest young men I know, is George Gammon. And we're going to have a very exciting show today because I've been on this May 23rd, 2022. That wasn't yesterday. That was yesterday. The IMF at Davos, Switzerland said the world economy is going to hit the biggest financial headwind since World War II.
Yeah.
What does that mean? You know what I mean? That's what we want to talk about. But more importantly, what can you do? So, George, welcome back. You had a fantastic event in Dallas, the Collective.
Yeah.
And we talked about it is, when you think about what are your assets today, if you're hanging out with idiots, you're probably an idiot.
Yeah.
And so when you and Kenny put on the Collective, I'm just blown away at the quality of people that showed up. They're already wealthy and they're proactive moving forward.
Yeah.
And then I'm in Walmart looking at another breed of character running around there. They're clueless.
Yeah.
So anyway, thanks for doing a great job at the Collective. Fantastic.
Well, thanks for coming. And it's the same thing with Rebel Capitalist Live at the end of June. And that's another investment conference we do. You're going to be speaking. And people like Snyder and Joseph
Jeff
Wang.
Snyder.
We were talking the other day about how
Jeez.
you're kind of the average of the 5 people that you surround yourself by. And I think that's extremely true. So if you can continue to grow your network, and always strive to be around smarter and smarter people, I think that's going to bring you up, and you're going to see the world in a much different way, and it's going to increase the probabilities that you achieve what you want to achieve in life.
Right, and what I was talking about is who are your teachers?
Right.
And what I found overall, because my whole fascination is why are some people rich and why are some people poor? But in 2022, the gap between rich and poor is now accelerating. It's getting wider than the Grand Canyon, but a lot of the times the people that are getting poor is simply because they had poor teachers.
Yeah, that's right.
Their parents are poor, or they come from a poor background, or like in my case, they're all school teachers who think even a PhD, that's all you need.
Yeah, and unfortunately too, if they don't see the world the way it really is, they assume that the solution or the solutions that are presented to them by the central planners and the politicians.
Correct.
They just take that at face value as that, the solution for bridging the inequality gap, if you will, is just to tax the rich. We'll just take everything from the rich and we'll just let the politicians take what they want and then just give the table scraps to the poor, and somehow that will reduce the wealth gap. But as Margaret Thatcher said, that'll just make everyone equally poor. What we want to do is we want to make the poor and middle class, we want to make them richer.
Correct.
And for whatever reason, it's because those people don't have that financial education that you've been talking about for the last 30 or 40
Correct.
years.
You don't get it in school.
Yeah, they assume that the way that you again, bridge that gap is by taking from one group, so somehow there's like this fixed pie, and we have to realize that in free market capitalism, that pie continues to grow and grow and grow, and that brings up the quality of life for the people at the bottom.
And that's where going to the Infinite conference with Kenny.
Yeah.
Because it's infinite.
Yeah.
Money is infinite. Another thing is about the media is so biased today, I can't stand it.
Yeah.
Like 60 Minutes past Sunday, just as IMF is making their announcement, this billionaire young entrepreneur, he's giving every kid a free college education with their parents. I said, well, it's good they're going to college, but what do they learn about money?
Yeah.
Nothing.
Or what do they learn about Marxism?
Yeah. Everything.
Yeah, exactly. That's my point.
That's my book. That's my book, The Capitalist Manifesto. If you want to be a Marx, go to school.
Yeah, especially college.
Yeah. Oh, it's horrible. So, George, how did you get so smart at such a young age? Tell us about your background.
Well, I retired in 2012, and I didn't know anything about the Fed. I didn't even know what the Federal Reserve was.
Where'd you grow up?
Portland, Oregon.
Oregon.
Yeah. And But back in 2012, at the time, I was in Las Vegas, and I was fortunate enough to retire with a little bit of money, but I needed to make a 5 or 6% return to make sure that I didn't have to go back to work.
Right.
And
so you're an entrepreneur.
Yeah, I was an entrepreneur for many, many years.
Right.
And I knew how to make money, but as far as investing,
Invested.
that's a completely different skill set.
And did you go to real estate? What happened?
Yeah, I went into real estate because I was trying to find something that was
Cash
cheap.
flow.
And cash flow.
Yeah,
That's right.
and debt.
And back
And
in
taxes.
2012, that was all of the above.
Yeah.
And that was a good time to buy. So I went into real estate, but I really wanted to learn kind of how things work.
Yeah.
And that took me down the path of Milton Friedman and Thomas Sowell and people like yourself and Jim Rogers and Doug Casey and Rick Rule and Jim Rickards and Peter Schiff and all these people. And that's where I really got the bug.
That's when
to
you get
learn macro.
educated.
Yeah, that's right. That's right.
And the funny thing is, Kim met my rich dad, she's going, what is real estate? What is real estate? So we moved to Portland,
Yeah.
and she cut her teeth on a little place called Eastmoreland.
Yeah. There's a golf course there.
Yeah.
Great golf course.
Eastmoreland Country Club, Eastmoreland Golf Course. And so she started buying her first little house there. The interest rates were like 9 or 10%.
Okay.
And she bought a little 2-bedroom, 1-bath house. She put almost nothing down, and she got $25 a month or $50 a month. It changed her life.
Yeah.
She says, I can make money with nothing.
Yeah, right.
And now, Kim's a frickin' monster.
Yeah. In a good way.
But it changes your mind. You go, I don't have to spend the rest of my life working.
Mm-hmm.
And interesting, her father was a Mr. Stocks and Bonds guy. He goes, what are you doing? You're investing in real estate.
Mm-hmm.
And she had to fight her dad. And thank God she had met my rich dad and my poor dad. And so she had 3 dads to contend with.
Yeah.
And she today, we bought the biggest, I invited you to come. Kenny and I are in the biggest gold mine in the world.
Yeah.
We paid nothing for it.
Yeah.
We get in for nothing. But that's the infinite return, which Kenny's having a couple of weeks from now.
Yeah. What was fascinating, going back to that last event that we did in Dallas that you referenced, is we did a property tour, and we saw a lot of Kenny's properties there in the Dallas-Fort Worth area, some of his apartment complexes. And after he took the group around,
100% debt.
well, he actually had a whiteboard. Did he tell you that?
No.
Yeah, so he had a whiteboard. We did a tour, and he took that whiteboard and he put it in the office. And then he had all of the people in our mastermind group. He walked through the numbers, when he bought it, how much he paid for it, how he paid for it, and then all the refinances that he's done through that forced appreciation, and how that equals these infinite returns. Yeah.
We have no money in the deals.
Yeah, that's right.
And it's hundreds of thousands a month in income, tax-free.
Yeah, right.
Because of depreciation, amortization.
Yep.
But that's what we teach. But our schools say to go to school, get a job, and get a 401k. I'm going, gag me. I mean, I would never do that.
Yeah.
But if you had bad teachers or poor teachers or your parents said, that's what you do.
Yeah. But even that in and of itself is a horrible argument. It's you just invest in the stock market, your 401k, because what happens is these financial planners, I'm sure you know this, yeah, exactly.
Who stole my pension, my 401k?
But see, this is very important because what the game these financial planners play is they only show you charts going back to 1981. And this is when Paul Volcker raised rates. So since then, we've been in a down cycle in interest rates. And you can say the stock market always goes up, right, if interest rates are always going down. But what happens when interest rates start going back up? And usually the cycle is about 30, 40 years. So if you look at charts of the stock market going back to 1927 to 1980 or 81 adjusted for inflation, it was pretty much flat. But see, they don't tell you that.
Right.
They just cherry pick the data.
Of course.
They want to give to you in order for them to collect their fees.
But something even worse happening is the last crash was, let's say, 2008 when the repo market reversed and all this stuff. And most of these financial planners and real estate brokers, all they know is a rising market.
Yeah, that's right.
Since 2008, we've been nothing, and happy days are here again because they kept dropping interest rates. Real estate went up, stock market went up, bond markets went up.
Yeah.
And we were just talking to Ralph Powell, and he said the problem with that is that the bull goes up the stairs.
Yeah,
The bear comes out the window.
Or I've heard the elevator, but the window. That's a little bit more dramatic, isn't it?
No, but Ralph Powell says when it comes, it's 4 months. Yeah. That's how fast this bear is going to go out the window. So anyway, so you invested in property. Where was your property?
In Kansas City.
Perfect place.
Yeah, and my objective might help some people kind of think about real estate or assets in a different way. The first goal that I had when I retired is just to look at my monthly expenses and say, how can I get my money to cover those expenses?
Yeah.
You see? And so how can I get my cash flow to cover these things? So then I know that I'm never drawing my savings down.
Right.
And I think it sounds easy and it sounds commonsensical, but very few people just kind of connect those dots and realize that if they can create enough cash flow with their portfolio to cover their monthly expenses, that is when you're financially free.
Yeah, that's a cash flow game. Out of the rat race, all this stuff. You got $10,000 a month coming in. You got $7,000 in expenses, $3,000 net. You're free.
Yeah,
and there's tax breaks for it.
Mm-hmm.
But in school they get a 401k. I'm going, are you kidding me?
Right.
But this is the challenge for the Rich Dad Company. Like, I was listening to Dalio and all the very smart guys, but they're all stock guys.
Mm.
They always say, get a diversified portfolio of stocks, bonds, mutual funds. I don't have any. I mean, I have companies I took public myself.
Right.
I own the stocks, and like silver companies that took public and all this. My stocks I control. And then we make most of our money from Kenny. Not most of it, but we get income from 13,000 or 14,000 rental units with no equity in them. It's pure debt, and we pay no taxes. And then, we invest in oil wells.
Right.
And we don't invest in oil companies, oil wells. And so when Biden took the Keystone XL pipeline, he cut that project. Oil went from $30 a barrel to $130 a barrel, 400% raise in one day. I actually liked Biden for about 20 minutes.
Yeah.
But unfortunately, as you know, George, the problem is higher oil prices cause higher fuel prices and higher food prices, which is going to wipe out the poor and middle class.
Yeah, because they're the people that get disproportionately affected because a higher percentage of their income goes to those things that are going up in price.
And they want to tax the rich, but there's too few rich.
Yeah, well, what they don't... Yeah,
we don't pay taxes anyway.
Yeah, the problem with that argument, I've been hearing that a lot lately. I've been hearing that in Davos.
All the time.
Yeah, we talked about that prior to recording, is the cure for inflation is not more money. That's usually the cause of inflation or consumer price inflation. The cure for consumer price inflation is more stuff.
Yes, produce more.
You got to produce more stuff.
Yeah, produce more oil. Guess what?
Yeah, so if you're just taxing the people who are producing, that defeats the purpose. That's going to create most likely higher consumer price inflation.
That's what Sarah's complaining about is the baby formula. They got so many regulations they can't produce it here.
Well, yeah,
right?
Everybody's blaming this baby formula regulation on supply chain, but that's not actually what's happening. It's over-regulation.
Yeah, right.
So
we just imported how many millions of cases of baby food? The United States, the greatest nation in the world, had to import baby food. Something's wrong.
Yeah.
Well, look at our trade deficit. I mean, we're importing everything. We're consuming so much more than we produce, but we've been doing that for decades.
We can print money to pay for it.
Right, but we can't print food. We can't print energy. And at a certain point, if those countries that we're getting that from say, you know what, we're not going there anymore. We're not playing your game.
But isn't that what's happening?
Yeah. So a great example is let's look at China starting to do deals with Saudi Arabia.
Yeah.
And I think most likely Russia in yuan. Okay. So most people just see that and they say, oh, it's kind of the deterioration of the dollar. But no, there's far more to it than that. So before that happened, China would need dollars to buy the food or the commodities, the energy they needed.
The oil.
That's right. So they needed to earn those dollars. So that's why they would export all these items that we buy at Walmart because they want our dollars so they can go buy the oil. So they're in a very difficult position there. But if they start doing these deals in yuan for oil, now all of a sudden they can print the currency to buy the oil. They don't have to earn it. You see,
Smart for them.
But what that means is now the United States doesn't have as much leverage over China
Correct.
as it once did.
Right.
So China can start gradually. It doesn't happen overnight, but they can start to tell the United States to pound sand. And if we can't get our stuff from China, where are we going to get it? We're not producing it here internally in our domestic economy. So then, where do we get it? We get it somewhere else at a much, much higher price, if we can get it at all.
Well, I'm a macro guy too, but there was a guy named Muammar Gaddafi, and he told the U.S. pound sand also. We're going to sell our oil in dinars, not dollars, and he disappeared.
Yeah.
I guess you don't mess with the U.S.
Yeah, but I don't know that you can compare Libya to
I understand.
to China. It's a different ballgame.
You don't mess with the money.
Yeah.
And that's when we come back, we're going to be talking more about this because you were talking about the crypto and
those central bank digital currency,
central bank and the IMF SDRs and all this stuff. They're playing games with money big time right now.
Well, they're trying to control it. It reminds me of the quote that we were discussing actually the other day from Kissinger. Remember?
What was that?
Who was the main influence on Klaus Schwab, who runs the World Economic Forum in Davos.
I didn't know that.
Yeah, we could tell that story when we get back from break if you want me to. But what his quote was, if you control the food, you control the money. Or excuse me, if you control the food, you control the people. If you control the energy, you control countries. And if you control money, you control the world.
That's right. And that was what Rothschild said. I care not who makes the rule.
Right.
As long as I control the money.
Yeah. And I think that's part of their objective. And we hear them out just explicitly talking about it at Davos this week.
That's real gold, and that's real silver. This is $2,000. That's concentrated money.
Yeah.
And this here is about $35.
Yeah, but more importantly, this has maintained its purchasing power over the last 5,000 years. So you can buy just as much stuff today with this little gold coin as you could have 5,000 years ago.
And that's why I invited you to come to our gold mine that we bought for nothing down in Utah.
Yeah.
But it's because we're taught to think differently. And that's what we teach.
Yeah.
So we come back, we're going more with my friend George Gammon here. I don't know how these young guys get so smart. I'm flying over to Miami. It's going to be your show, Rebel Capitalist show. But who is it, Ben Shapiro?
Yeah.
Ben Shapiro, another smart young guy. It's amazing. Old guys are getting taught by young guys. We'll be right back.
What would you do if someone handed you $100,000 right now? Trick question, nobody knows. That's why people are sitting on more cash now than in the past 20 years, according to Bank of America. And with every major index headed to bear territory and the crypto market losing $1 trillion, the Wall Street Journal says the options are shrinking. But that doesn't mean that they're not out there. Because get this, Bloomberg recently asked some financial experts the same question, and they overwhelmingly recommended this particular safe haven asset. It's outpaced the S&P 500 for the last 25 years by a whopping 164%, and has the lowest correlation to public equities of nearly any asset class. The market for this asset remains strong even during the inflationary period of the 70s, the 2008 crash, and COVID shutdowns. And for the first time, it's available to retail investors thanks to Masterworks. Although the demand is through the roof, so there is a wait list, but our listeners get a skip ahead at masterworks.art/richdad. That's masterworks.art/richdad. See important Regulation A's disclosures at masterworks.io/CD.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. Our guest today is a very dear friend. He used to be a neighbor right behind this wall here.
Yeah.
It's George Gammon, but he found religion and moved back to Colombia. And he puts on the most spectacular, he and Kenny McElroy put on the most spectacular, I don't know what you call it, but it's a magical informational group called The Collective.
Yeah.
I go to it, I'm blown away. I am blown away. The point here is that you are who you hang out with.
Mm-hmm. Absolutely.
And we talked about it, the gap gets wider and wider depending on who you hang out with. And if you're hanging out with village idiots, guess what? You're falling behind big time.
Yeah. And, I'm a perfect example of that because, like we were saying earlier, I retired in 2012, but I didn't start my podcast or my YouTube channel until 2019, the podcast not till 2020. And in the interim, when you're retiring, everyone thinks that life on the beach just sipping pina coladas is going to be great. But that gets old after about 2 weeks, and you can feel yourself deteriorate mentally.
And I was saying to you from Portland, and Kim bought her first rental property in Portland by Eastmoreland, and she found religion. She could buy something for nothing.
Yeah.
In the worst economy ever.
Yeah.
Interest rates were 9%, and people are crying the blues at 5%.
Yeah.
And once you understand that it's all in your head, and you can adjust the dials in your brain, you'll see a different world.
And it's all about that knowledge.
Yeah, and so we have Rel Pell on just now. There's more opportunity today, but people are committing suicide. So what were you saying, Sarah? What's happening with
during
Bitcoin?
During break, we were talking about the future of digital assets.
Yeah,
and I was asking George about Luna, this big crash of stable coins. Millions of dollars were lost.
Now, did I get into an argument on that one?
It was civil.
No, this is George. George, it's a Rich Dad radio show. I'm known for my tact and discipline and all this stuff, my silver tongue. And this, every time I hear it from the
experts,
FNGs, FNU guys, this will never go down. I mean, how many times have you heard that one? And, I'm older. I hear it all the time. So he's yelling about this will never go down. And I go, why? It's got algorithms. I went, oh, God. So I started screaming at him. I said, don't give me that crap, and all this stuff. And then 2 days later, boom, goes to zero almost, right?
Yeah, and so it sent a shockwave, I guess is what I was trying to say earlier. And, so does that, are we seeing this trembling of, maybe this isn't the future? And you had a great comment about the .com era.
Yeah, well, I think that it'll
be... And the real estate area, too. The same thing happened.
Yeah. I mean, I think it'll be similar in the sense that, back in the late 90s, everything was .com, and they were getting these billion-dollar valuations. And it is true that the internet was the future. Yeah, it is true that the internet was the future, but not all those companies. 99% of them go bust. Mm-hmm. And I think it'll most likely be the same with crypto. There will come, maybe Bitcoin, Ethereum will come out winners in the long run and will be here. I don't know what purpose they'll serve. I don't know if they'll be transactional in the case of Bitcoin or be more of a digital reserve asset, store value. I'm not quite sure, what place it'll play, but I think it'll most likely play out the same way the .com bubble burst in the 1990s.
But I didn't know this. They're committing suicide?
Oh, yeah. There's a whole, Reddit is going crazy over this crash. In fact, Reddit, it's another social platform. Okay. So they're talking, friends of theirs committed suicide. They lost millions in this stable coin.
What was fascinating is I did the Fresh and Fit podcast. Those two young guys out in Miami. I think you know them. And I was talking to them offline about cryptocurrency, and they said that their friends, in this 20-year-old age group, are so into crypto that that's all they have, and to the point where, excuse me, a lot of times the Fresh and Fit guys will have to lend them money for lunch. Not because they don't have money, but all their money is in crypto, 100% of it.
They're
and
not just billionaires, but no cash.
Yeah, or millionaires or thousandaires, maybe in this case. But it's not in Bitcoin and Ethereum. It's in all these lesser-known altcoins that they think are going to or have the potential to go up 1,000x, and they're trying to be the next superstar on Instagram, billionaire or whatever that gets rich in crypto, and then they just get completely wiped out. And it gives them that very, very difficult lesson that young investors have had to learn throughout the ages, that it's not different this time. To your earlier point.
Right. We've been through this before.
Yeah, but I've heard that, no, it'll never go down. I'm going, the moment I hear that, I know it's going down.
Yeah, and there's always, Jim Rogers, I think, articulated it beautifully in the Market Wizards books, where he says you've just got to buy panic and sell hysteria. And sometimes, you can tell when there's hysteria, and when Bitcoin was at 65,000. And now I'm long-term bullish on Bitcoin.
Me too.
But you got to pick and choose when you buy based on that panic and hysteria. And there was I was seeing it on Twitter nonstop. I was seeing it in social media. I was seeing it in all these like chat rooms like Clubhouse where the hysteria was just mind-boggling. And that's something that I think people can sense, but they need to make sure they're not getting caught up in that emotional frenzy. They're going to make bad decisions.
I have a great story. So you know how you say when you get out of real estate when like everybody becomes a realtor? What's the cashier gives you, call me. Okay, here's how I know I can't trust crypto yet is my mother-in-law, who's 75, sent my husband a text saying, I think I want to get into crypto.
Yeah, right.
Okay.
Yeah.
It's time to drop back and punt.
Yeah, or at least that tells you now's not the right time to buy.
Yeah.
Now's not the right time to buy.
And then what we were saying yesterday is that the problem with bull markets is it makes stupid people look smart.
Yeah.
And the saying is the bull goes up the stairs, bear goes out the window. And when it comes down fast. My question is, though, I didn't know people were committing suicide.
Mm-hmm.
Wow.
I mean, these are 20-year-olds that probably didn't have anything really to start in, got lucky, go to the moon or whatever the phrase is, and then they lost it all.
Well,
and to the point, they don't have any cash.
This is deja vu all over again because in 1929, the saying was, watch out for falling bankers. Because they were coming out of the window, killing people in the street below.
Yeah. But at the end of the day, who do you blame? The Fed. It's the Fed. Because this is all just pushing people out the risk curve. Well, it's pushing people out the risk curve because you keep interest rates artificially low.
Do you listen to the Fed?
Well, there you go. Good point.
So the whole thing here is, get smarter. That's what we're talking about.
Or at least hang around smart people.
Yeah.
Yeah.
I mean, oh my God. It's going to be as Raoul Pal was saying, man, we're going to make so much money because we have what's that thing called? Green New Deal stuff? Carbon credits. Oh. And we have biotech coming online and all that. There's more opportunity today, but not if you hang out with idiots.
Yeah, and I would actually look at it from a different perspective than Raul. I do think there's incredible opportunities, but I think it would come in, it could come there, but I think it will also come in pretty much the opposite arena, and that's just old school commodities. I think we're going into a long-term super cycle.
Absolutely.
I think you're going to see prices of things like coal, uranium, and I think the overarching theme in pretty much everything that you've said for the last 30 or 40 years is if you're going into an investment and everyone else is doing it and that's what they're teaching you in school, you're probably not going to make money. You're probably going to lose money. But if you're going into an investment and every single person is telling you, Robert, you're crazy. What are you talking about? You're absolutely out of your mind. Don't do that. Those are the investments where you've made the most money. And it's been the exact same thing in my life, in Jim Rogers' life, and probably in Raoul Paul's life.
Yeah, and we have no stocks, bonds, or mutual funds because my rich dad taught me differently. So today, like I was saying, and I said this all the time, we own oil wells. We don't own oil companies. We don't own stocks. So again, when Biden cut the XL pipeline off, oil went from 30 to 130. Holy mackerel, we're making so much money today. The dangerous thing is people are being wiped out. Inflation's killing them, food and fuel.
That's right.
That's what scares me.
Yeah. Yeah, and that's the moral of the story, and that's the way these things always play out, is when the central planners try to, or who knows if they're trying to do good, they might be trying to do bad. Going back to Machiavelli, we had that conversation the other day.
Prince.
Yeah, the prince, that's right.
They think differently than we do.
Yeah, but any intervention they have in a free market economy, it's always going to make things worse for the poor and middle class, whether it's through the insidious, invisible tax of inflation, or whether it's just propping up assets that are creating these bubbles where people get completely wiped out and misallocation of resources and malinvestment. I mean, we've got to understand that central planning, or Marxism, as you always say, this is a very, very slippery slope. This is the road to ruin. Or as Jim Rogers says, this is the quick path to the poorhouse. We need to understand that free market capitalism is not perfect, but it's the best system we have to raise this standard of living for the poor and middle class.
And we're going so Marxist. That's why so many kids, if I go to college, I'll be fine. That's why you got taught Marxism. Mm-hmm. They talk about tax the rich and all these other things they teach. But the thing that's frightening today is what Klaus Schwab is saying. Someday you'll own nothing.
Yeah.
And you'll be happy.
Right.
That's the abolition of private property, which is Marx.
Yeah.
And that's what they're teaching the kids.
Absolutely. And the crazy thing is they're trying to use inflation as a reason to tax the rich. And it's just completely perverse because the way you solve consumer price inflation
Produce more.
is, like we were saying, by producing more stuff. And, if you're taxing all the people that are producing, are we going to have less stuff in the future? Or are we going to have more stuff?
No, as you said, the money just moves.
Yeah.
Right? We move to where we're treated the best.
Yeah.
Well, and as Tom Wheelwright, sorry to interject, but Tom Wheelwright always says, you can't tax the rich because the rich have
pay taxes
right.
anyway.
They earn their money in assets, so you're only taxing the poor and middle class. So it's a solution that will never work.
And inflation is the worst tax of all.
Yeah.
And it just causes more people. And what Rel Pell is saying is we're going to shift to UBI, Universal Basic
Totally agree with
Income,
him. Totally
MMT, which is Marxism.
Yeah.
Someday you'll own nothing and you'll be happy. The government will give you your money.
Yeah, and I just want your audience to think about this for a moment because I really want to beat this dead horse because I think it's important. We are experiencing global consumer price inflation right now, not just this is a huge, huge problem, a problem that we haven't seen since the 1970s.
This is the biggest global crisis since World War II.
Yeah, absolutely.
That was just today.
That's right.
Okay, go ahead, keep going. Excuse me.
And their solution is to do what? UBI. Let's give people more money and let's restrict the supply of goods and services even further by making it harder for the producers to actually produce. So what they're doing they're trying to sell this to the general public. The way we solve consumer price inflation is by creating more money and producing less stuff. It's the complete opposite. Yeah, we need less money and we need more stuff.
So I'm asking this question: when you give people money, does it increase the debt?
Well, it depends on how that money is generated. But
I understand, but somebody's going to pay the piper in there.
Yeah, usually it's going to be produced through the issuance of new debt. So if it's the government issuing new debt for that deficit spending, or if it's a bank issuing new consumer debt, then you've got a debt, you've got a loan to match up with that new money that was created. Yeah.
So is there any money in a credit card?
Is there any money? Yeah, a credit card increases the money supply.
No, but is there any money in it?
Oh, no.
It's debt.
Yeah.
And that's how money is created.
Yeah.
You have to borrow it into existence.
Yeah, that's right.
That was 71. You have to borrow the money and money is created. That was a fractional reserve system. Fractional reserve system says you put your savings in a bank, let's say $100, the bank can lend out 1,000, 10-to-1 leverage in there.
Yeah, now they don't even need that.
No. And that's
they don't really need reserves at all to lend. They can just create money out of nowhere. And that goes back to the central bank digital currency and them trying to ban cash.
And I think that's why so many young people are in crypto. They know something's wrong. They just don't have the big macro picture of it.
Mm-hmm.
And they get caught up in all these swings. So you were talking about CBDC, central bank digital currency. What does that mean to you, George?
Well, a central bank digital currency simply means that we all the average Joes and Janes in society, including the businesses and corporations, now have an account with the central bank. In our case, it would be the Federal Reserve.
But isn't that Marxism, central banking?
It's absolutely 100% central planning. Because what happens now is the banking system is in charge of creating most of the new money. Now, it's a little bit different with these deficits and quantitative easing and whatnot. But usually it's the banking system. So if they keep that loan on their balance, if the bank continues to own the loan, they want to lend to someone who's going to pay them back, right?
Really?
So hopefully they're going to lend it for productive purposes, meaning the majority of money that's being created is going to create more goods and services.
Right.
And that's why you don't have the inflation, even though the money supply increases. Now, what
It's
happens...
called capitalism.
Yeah, and that's why the free market works.
Right.
So, and that's, by the way, why the free market creates deflation.
Right.
Not inflation.
Exactly.
Prices going down.
Capitalism actually brings prices down.
Yeah.
Because you can't compete otherwise.
Yeah, which brings the standard of living for the poor and middle class up.
Yes. But they're teaching Marxism in school. That was my book, Capitalist Manifesto.
Yeah.
That whole thing is so backwards, run by school teachers. Oh, my God.
Yeah, exactly. So if we move into the system with a central bank digital currency, then all the bank accounts go to the Fed, and then the Fed determines who gets the loan and why. And the big key there is the Fed doesn't have a profit and loss. They can lose money. So where a bank has to lend productively, the Fed can lend in a way that isn't productive. They can lend to whomever they want. They don't have to worry about being paid back. So that's centrally controlled money supply, debt creation. And that, to your point, is Marxism.
But it's also massive control. It's Orwell. Big Brother is watching.
Yeah.
They can tell exactly where you're spending your money, what are you spending on, and where is it?
Yeah, so going back to the IMF and this gal that's in charge that was speaking at Davos, she was saying how we need a central bank digital currency, and the global governments need to come together. And of course, the IMF would manage this in the World Economic Forum, but they need to come together to create a solution for cross-border payments. This is how she's selling it, is that all these poor people have to pay Western Union, 20% fee or whatever. And she's right, but she doesn't care about that. She just cares about the solution, which is the global governments coming together with this payment system for cross-border that's seamless and free. But, of course, we're using a central bank digital currency. And then the reserve asset becomes the SDR, which is the currency of the IMF.
Special drawing rights.
They have control over the money supply, and it's not the system we have now with the United States having the global reserve asset or the global reserve currency, and the banking system creating that currency globally.
Right. The biggest thing with central bank, I'm not financial. I mean, not crypto smart or anything. But it's Orwell's Big Brother is watching. They can track you, and the reason I like this stuff here, it's real gold. This has been here since the Earth was formed. This is silver, been here the Earth is formed. I can run with this and spend it anywhere in the world. They can't track me.
Yeah.
And so when Bitcoin came out, remember that they were saying, they're going to use it for the drug trade and all that. I said, well, you think dollars aren't?
Yeah, exactly.
Give me a break. I mean, how can people be that stupid and drink the Kool-Aid from the Fed?
Well, not everybody is. I was in the airport yesterday, and I was going through the line, the security line, and I actually saw someone wearing a shirt that said "Make 1984 fiction again."
What does 84 mean to you? Because that's a really interesting book,
Well, it's pretty much what we're seeing play out right in front of our own eyes. I mean, it was supposed to be fiction. But in my opinion, this is the objective of these Davos types, the global elite. And I don't think it's a conspiracy theory. I think they're coming right out and saying that, hey, we want the world to consume less energy. We want to reduce the population, or the birth rate, they'll say. And we want to, we want power and control because it's in your best interest. Look at what the WHO came out with, this health treaty. Did you see that?
The World Health Organization.
Yeah, they came out with this opinion. I don't know if it was this proposal for a treaty where basically they control in the future every country's position on lockdowns, on mask wearing, on all of these things that we've seen play out in 2020 and 2021. The WHO wants to be in charge of all of that. So all these countries sign treaties that say, yes, we're giving our health sovereignty over to you global elite.
But that's the World Health Organization, the World Bank. Everything is world.
Yeah.
There's no sovereign.
Yeah.
No national.
Yeah,
world.
That's right. Well, so you've got these two opposing forces going on right now. Most of us in the real economy, and I think the people listening to this show, they want decentralization. They want control of their own destiny. Where
they want privacy also.
And privacy.
Freedom.
Yeah. And
a few privacy, freedom, a few words like that.
And they want it for their children.
Right.
Where these Davos types, they want the opposite. They want complete centralization because they think that all of us are inferior, stupid, yes. Dumb rubes. And, we're only going to make things worse. So we need to give them all of our freedoms, all of our liberties. They need to have complete control to be able to micromanage our life. And that's the only way that, in their minds, that we're going to survive.
But that's what Rich Dad, Poor Dad is. My poor dad, brilliant academic, but flat broke. But he thought all he needed was his PhD. and Stanford and Northwestern University of Chicago. And he just thrived on that. And my rich dad, who never went to school, goes, your father's an idiot. But they think they're superior.
Yeah, that's right.
They think they're above the law, some of them. The other thing, too, the thing about, the reason we're like macro is history does repeat. As Jim Rogers says, one thing history teaches you that people don't learn from history.
Yeah.
And so when I read Ayn Rand and Atlas Shrugged, I said, where did John Galt go hiding? I went, do I have to hide? I mean, I was, she escaped from Russia.
Yeah, right.
So when I read that book, where is John Galt hiding? I went looking for a place to hide. And so that's why Kim today is on, I won't say it, in South Carolina on a private island, hiding with people who subscribe to Ayn Rand.
Yeah.
Where are you hiding today?
Yeah. Yeah. I mean, you look at books like 1984 and Atlas Shrugged, and you see, my gosh, how on earth could they have seen this coming? These were supposed to be fictional books, but they predicted the future and what we're living through now. I think it's just because, to your earlier point, history repeats. Or if it doesn't repeat exactly, it rhymes. I mean, I was doing a lot of research just over the last couple of days on World War I and how World War I started. And it is eerily similar to what we're seeing.
The Weimar Republic.
Well, that was World War II. And as far as their hyperinflation, but World War I was really the
reparations from World War I that set up. I mean, that's what it was a chain reaction. Go ahead, keep going.
Yeah, but the Duke gets shot
right
in wherever he was in Slovenia or something like that. I can't recall where he was, but basically, then you have the two groups. Austria, and then Austria and Hungary, and then the other group. You have all of these larger countries that back one of the smaller countries that hate each other. And, then the world gets kind of separated into two groups, and then they go to war. And you see the same thing happening today with Russia. You've got larger countries that are siding with them, and then you've got other countries that are siding with the West. So you have two economies, especially Ukraine, that are relatively small. Now, they're wildly important because they provide a lot of the food and energy for the world. That's for sure. I'm not saying they're not important.
Ukraine is the breadbasket to so many countries throughout the world.
Yeah, right. You got natural gas, you got potash, you got fertilizer, you've got lumber,
lithium.
you've got a lot of stuff there.
Lithium for batteries.
In Russia and Ukraine. But my point is, you've got from a standpoint of GDP, you've got two countries that are relatively small compared to the Japans and the Chinas and the United States. But yet they're in this conflict, everyone, all these huge countries that do have, a lot of economic power and huge militaries are picking sides. And you can see it escalate, and it just feels the same. Obviously, I hope it's not. And there are no certainties, there are only probabilities. But the point there is, if you look at history like World War I, World War II, all of these wars, they usually start the same way.
Right. So let's get into education, because I think that's one of the most important things is who are your friends you're hanging out with? As we talked about here, is if you're hanging out with the village idiots, you're falling behind, right?
Yeah.
And I know a lot of village idiots all hanging out together, going, holy moly. So what's happening with the Rebel Capitalist show in Florida?
Yeah, Rebel Capitalist Live. So
live. What's the date?
That's going to be June 24th through the 26th, where we've got some incredible speakers. Yourself, we've got Doug Casey,
Jeez.
who I just spoke with yesterday.
I love Doug.
He's Jeff, always very entertaining. Yeah, we got Jeff Snyder.
Every time I talk to him, I need a brain transfusion or something.
He has to go see Nicole for an IV.
Right. Then we got Joseph Wang, who actually used to work at the Fed.
Really?
Yep. He used to be in charge of the New York Fed's trading desk. Wow. So he actually did quantitative easing.
Wow.
He was the one that had to buy the treasuries and the mortgage-backed securities from the bank. So he'll be there. Brent Johnson, our good friends Lynette Zhang, Mark Moss, Kenny McElroy, Hartman, Dr. Chris Martenson.
Wow.
Will be there as well. So, yeah, it's going to be a great event. We're looking forward to it.
What city is it in?
Miami.
And how do people get tickets?
Rebelcapitalistlive.com.
How much?
Hey, boy, you guys make this easy, don't you?
No,
We had a politician on yesterday, and even Robert let him get in his URL every couple times.
Right.
that was a really good show, man. My neighbor is running for attorney general.
Okay.
I didn't know anything. I had no idea what attorney general did.
Oh.
It was wasn't it fascinating?
I learned a lot, actually. I learned more than I did in school.
Holy mackerel. It's not an ordinary position because they enforce the law, but most attorney generals are left.
Yeah. Oh, big time.
Holy mackerel.
Big time.
Yeah.
And then most of them have never had a job.
Mm.
They've been government employees.
They grew up in the government,
Yeah.
It's just,
So this guy, Rodney Glassman, he's run his own law firm because the attorney general runs the biggest law firm in the state.
Mm-hmm.
And they affect the Department of Education, Transportation, and all this. So when you get these left-leaning attorney generals, we just get more of the same.
Yeah, right.
It's the most amazing time.
The thing I liked that he said was attorney generals are really the only ones to be able to tell the governor no. So when mandates were happening and they were shutting down restaurants, the attorney general is really the only one that could have stopped that.
Yeah, the counterbalance there.
Exactly.
Yeah. And the sheriffs are very important too.
Yes, absolutely.
So it's another Rich Dad radio show. Please listen to it because it's not about the Arizona attorney general. It's about who enforces the laws.
Mm-hmm.
And as we know, we're going very woke in the laws.
Yeah.
I won't say anything more because I'll be yanked off as a racist.
Yeah.
But isn't that brilliant marketing? If you say anything today, you're a racist or a homophobe.
Yeah.
They've really set it up.
Or a domestic terrorist.
Yeah.
You know,
If you're a parent who questions the schools.
Yeah.
Holy mackerel.
Yeah, but that goes back to Orwell in 1984. It's doublespeak. Biden just came out with or tried to come out with the Disinformation Governance Board, I think it was.
It's already disbanded, right?
Yeah, it was basically the Ministry of Truth from 1984.
Anyway, what an exciting time, huh?
Yeah, it is. I think it goes back to that Lenin quote that you and I have discussed extensively, where he said, "There's decades that go by where nothing happens. And then there's weeks that go by when decades happen."
Yeah.
And I think, and I said this.
John Lennon is Vladimir Lenin.
Yeah. Let me clarify there. Yeah.
The Beatles are pretty profound, but not that profound.
Yeah, and I think that we were in 2020 and 2021. I said this on my channel many times. I used that phrase to describe what we are going with from a standpoint of our personal freedoms and liberties.
Yep.
In 2022. I think you've got to look at the economy, and you've got to look at censorship through that lens.
You've got to go macro.
Yeah, but you've got to look at it through that lens of understanding that we're going through weeks where decades are going to happen.
But this has happened before.
Mm-hmm.
That's the worst thing. And as like Roger says, history proves people don't learn from history.
Yeah.
I'm going, holy mackerel.
Yeah. And, there's no excuse. You were talking about how people need to educate themselves and to really reevaluate their own personal network and start hanging out with people where they're the dumbest one in the room.
So that's why I go to the Rebel Capitalist Live in Miami.
But also with the internet, there's no excuse. I mean, going back to when I retired, I didn't know anything about macro.
Right.
I've never taken an economics class. I've never taken a finance class, completely self-taught. And it's just from listening to people like you and Jim Rogers and Jim Rickards and Schiff.
The old guys.
That's right. On podcasts and on YouTube and just educating myself. I didn't have a network back then, but I kind of in a way made you guys my online network.
Correct.
Just by listening to all of your content. And that's something that anybody can do today.
But there's one more step, which is a video. I'll send you this video. It's on loneliness. And he's saying that, the screen is one thing, but it just causes a huge demand to reconnect with human beings in person.
Yeah.
So that's what Rebel Capitalist Live is doing. That's what Kenny's doing with the Infinite. And it was a book by Alvin Toffler called Future Shock. He called it High Tech, High Touch. That the more high tech things got, the more demand for high touch in face-to-face, person-to-person. And with that is why we created the cash flow board game, so people could interface with each other and discuss and play games and get to know each other face-to-face. because loneliness is one of the biggest growing problems in the world today.
Oh, absolutely. And
Because
it's going to get
people-
worse. Yeah.
People are highly connected but lonely.
Yeah, that's right.
And so it is
And at the end of the day, to your point, social media cannot give you
that connection.
what human beings instinctively need,
Right.
and the way we're hardwired to have that communication
High
and
touch.
interaction with other human beings.
And we want a spiritual connection.
Yeah.
And that's what's missing. But so what's happening? People, gangs are forming and all this stuff. Murder rates are going up. You're hanging out with the wrong guy there. You know what I mean?
Yeah. Yeah.
And or women. But anyway, George, thank you. I look forward to seeing you at Rebel Capitalist Live in Miami. What's the dates again?
June 24th through the 26th, and they can see it at rebelcapitalistlive.com.
Please go there for high touch.
Yeah.
You can watch it on video and all this stuff, but you come to meet people who are there,
Yeah.
people who show up, just like we were in Dallas a couple of weeks ago.
Yeah, I think that's really part of the value, if not the biggest value, is yes, it's great to hear people like you speak live,
Or on Tube.
but it's even better to go there and interact with other rebel capitalists.
Yeah.
Other people that value freedom, liberty, and free market capitalism. I think, again, the speakers are great, but the real value
Other people.
is meeting other people there.
And that's when I was at the collective in Dallas. You meet some great, great, great real people who are breathing and talking, get to know them personally.
Yeah. All very successful and all trying to solve the same problems that you're trying to solve with a
Yeah.
similar worldview.
Yeah. Because this video I'll send you on loneliness.
Mm-hmm.
He says, we want to go back to our tribe.
Yeah, right.
It's just a human touch. They want to go back. So anyway, thank you, George. Thanks for keeping up the great work, my friend.
Thanks for inviting me. Always
Nice
a
to see
pleasure.
you. Again, nice to learn from younger guys. We'll be right back. Welcome back, Rich Dad Radio Show. Really old friend, or young old friend, or whatever it is. George Gammon, who lives next door here. You can listen to the Rich Dad Radio Show anytime, anywhere on iTunes, Android, or on YouTube. Please leave a comment. And all of our programs are archived at richdadradio.com. We archive them for one reason. We don't make any recommendations. It's up to you to decide what you want to do. And the most important thing is if you have a friend, a family member, or somebody who needs to hear this show, go to richdadradio.com and listen to this program together and then discuss it. We talked about high tech, high touch. Get to know the people you're talking to. So with that said, Sarah, final words for you. What do you think?
Final words. I thought it was a great conversation. Thank you again for your time. It's always awesome to have you around. The biggest thing that
We kind of miss them upstairs.
I know, I
Yeah,
do.
it's
I
like,
look at the dark office. I'm like, oh. The interesting thing I'm taking away is the buy panic, sell hysteria. I mean, I feel like we're in a biggest opportunity of our lifetime right now, and so
And that applies to all asset classes.
yeah, absolutely. So I think now more than ever, financial education is important. And listening to shows like this and like Rebel Capitalists, there's no excuse not to survive or thrive during these economic turmoil times.
It's the most
Completely
exciting
agree.
time. But if you hang on to old ideas.
Right. And Bert Doman said that, the people who are going to get killed are the buy, hold, pray crowd.
Yeah.
I mean, he wants to teach Robert how to sell, what is it? Short the market or something. That went over well.
He wants to short a market. I want to learn how to buy a bar because I think drink is going to go up.
Yeah, right.
Anyway, so thank you for your time. It was a great show.
Fantastic. Final words. It's always nice to have George around. It's like I said, we miss you here next door. It's really.
Yeah, it was nice.
It was really, really nice.
Well, it's great to be back, and I really appreciate you guys inviting me on.
Yeah.
It's always a pleasure, and it's always a fascinating conversation that I truly value. And every time, we get to speak, it's just something that I'll remember for a long, long time.
We always learn something from each other.
Yeah, we do, don't we?
Yeah, it's changing so fast. You go, okay, let's do this.
Yeah.
So anyways, a lot of magic going on, but I think always remember this. The bull goes up the stairs and the bear comes out the window.
Yeah.
And I think the bear is about to jump. Thanks, George.
Thank you.
And thank you for listening to the Rich Dad Radio Show.